Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, February 24th, 2010. Well, today, folks, the wildness intraday has continued. It has been a wild, insane day with the markets going up and down, left and right. You name it, it has been done. Now, why has it been so wild? Strictly speaking, the dollar. It's all about the dollar at this point. And again, we'll talk about the dollar here. I'll put up the chart of the UUP and look at the volatility here. I mean, literally, you have a gap down in the dollar, a flush down to here, then a pop all the way back up to here, then a flush back down, all the way back down, and then a reversal, pause, up, and then sideways. But this move on the market has caused insane volatility intraday. In fact, today's probably the most volatile intraday period with swings intraday since 2010 began. We've had other days where we've been down, 200 points or whatever, but you've never had the type of moves that we're seeing here with the markets up and down, left and right intraday. Now, going back to the spiders, you can see how the markets have continued to kind of been riled up and down. A lot has to do with Bernanke testifying. We're going to talk about that. Again, to Bernanke testifying on Capitol Hill today, and he's basically crushed the dollar. All his comments were very negative on raising interest rates. And again, if interest rates are not going higher, then the market will continue to rally on the fact that the dollar will go lower. Again, interest rates, if they stay the same and do not go up, that is bearish for the dollar. Bearish for the dollar means bullish for the markets. And the spiders are trading up $1 on the day. That's a solid move to the upside. The Dow is up 94 points. The NASDAQ is up 26. And the S&P 500 is up about 10.5. Now, there were some other catalysts today. In fact, just like yesterday, remember we discussed yesterday in the video how the consumer confidence numbers came out and they were very, very ugly. In fact, last month consumer confidence was 56.5. This month we saw 46. That's a 10.5 drop in consumer confidence. That is an unbelievably big drop in consumer confidence, and that's really why you saw this unbelievable drop in the markets here yesterday, right here. I mean, that's really what it was. The consumer confidence was released at 10 o'clock, and there's your fall on that number. Now, the key today, folks, for this fall was not only the dollar getting a boost up initially, but also we got new home sales out at 10 o'clock. New home sales down 11.2%. Biggest drop, to new lows, essentially new all-time lows on that. That is a huge drop, folks. Wall Street did not by any means expect that. All right, and I can say that again. This is another surprise to Wall Street, and all of a sudden, we're starting to see a little bit of the, negative news coming into the market, much worse than expected. However, the markets, you might say to yourself, well, why are the markets positive today? Simply put, folks, just refer back to the dollar chart. UUP is down on the day. Even though we've rallied off the lows, you're down on the day, and that means if the dollar is down, the market should be neutral to positive. And again, that's what we're getting today with the Dow up about 100 points, just underneath 100 points. And again, the more the dollar pushes up, the more that'll push the markets down. In fact, look at this little bit of a pop here on the dollar. See this right here? Little green just forming on the UUP, which is the dollar index. Look at what the spiders are doing right now. See the little red cell? That's proportionally the opposite. It's literally whatever that's doing in the dollar, you'll see the opposite in the market. And you can actually look at the markets and you'll see a move on the markets, and you can say, well, I know what the dollar is doing just by looking at the SPY or the Dow or the S&P or the NASDAQ or any of those indexes. But in any case, folks, the spiders right now up 93 cents, coming back in a little bit. Really amazing moves today. The calls in the chat room continue to be unbelievable as we initially gapped here and pushed all the way up. This is where I gave out a short call. I went short myself. Look at the fall we got all the way back down. Here's right here. Look at this low. See this pivot low from yesterday's close, and this is where the low of today was. That's your buying opportunity. Cover your short and go long, and look at the move back up. I mean, the swings intraday made this morning one of the most profitable days of 2010 for swing trades, for day trades in the chat room. Really, truly amazing time right now in the chat room because of the volatility. Now, since then, we've kind of just gone sideways here, and it's been a very muted day trading environment. As soon as the market loses its luster or the volatility, you go back to one of those kind of just a couple scalps here, a couple scalps there type market. But this morning was truly outstanding. Now, if we move back up, folks, you're going to look for this pivot right up here. This is a key level at 111.10, 111.10 to 111.20. This will be a lot of resistance on the markets. That's if we rally higher into the afternoon session. If you get through that, you're going to go back to 111.50 to 111.60, which will be another huge level on the markets. Each of them are scalpable intraday as a shorting opportunity. On the downside, folks, as we travel down, if we start to fall a little bit more, see this pivot right here? You pulled back into this trend line. That will be a little bit of support. That is at 110.60. 110.60 will be support. If you break through that, you're going to go down to this 50 moving average, this yellow trend line at 110.35, and then down to 110.18, 110.20, and then down to the 109.85, 80 area down here, which will be massive support. Obviously, down here at the 109.50 would be the ultimate support, would be an easy long play as well. But a couple other things to just mention here, guys, that I want you to be aware of. One thing that I'm seeing here, and this is just an overall view of the markets, is you're seeing that if this market did not have stimulus in it, we would be doing a double bottom in the economy, meaning that we'd have a second flush down, probably even worse than the first flush if there was no stimulus. Now, having said that, we're seeing also signs that the stimulus is not going to be enough to really keep this market from going back down, keep the economy from double dipping. And again, in my opinion, and this is what I wrote in an article today that I put out, and you can find it on the blog if you wish to read it. Basically, what we're seeing here, folks, in my opinion, is you got to let the economy do what it's going to do. In other words, we're going to be the next Japan. I mean, we're going to have 20 years of really no growth and very stalled out economy, in my opinion, because we're doing the same things that Japan did. Japan did many stimulus movements here, and eventually it didn't have any impact. That's what we're trying to do here, and my policy would be let it fall hard. I'd rather have sharp pain for a year or two and then back to growth rather than 20 years of dull pain and just that chronic pain. And again, we're all about kind of the chronic pain, living with the chronic pain, but we just want to take drugs and avoid the sharp pain. But sometimes, honestly, the sharp pain is better because you flush it out. It's like you got to flush it out of your system, got to flush it out of the economy. Let it be sharp, stop with the stimulus, just let it be done, and then in a year or so we'll be back to growth, and this economy will be back on the right track. Again, they're not going to do that, of course, because God forbid the politicians don't get reelected in a couple years when they're up for reelection because they took the hard road, even though it's better for people in the long run. And again, we all know that politicians are just looking to get reelected in general, and that's a general statement, not saying every single one's like that, but a majority are, and they're just looking to make sure that they get reelected next term. In any case, folks, your levels are as follows on the 60-minute. Let's touch on the 60-minute, then we'll go over a couple different charts. As you can see here, the market is consolidating here. You may have a little bit more of a move up. Looks like to me, and again, you can see a little bit of a channel trend line beginning to develop from this high pivot. If we draw it straight down, it looks to me, see that? From this high to this, and down here, that looks like a little bit of a trend line resistance level, and you're falling off of it on the 60-minute. If you can break through that, I do think you go back to 111.50. Now, yesterday was a fantastic day. I took one of my short plays off the table when the market got crushed yesterday, and again, I will look to re-add that position, but you have to be a Research Center subscriber to get when I'm adding that. And again, I will give that out as an alert in the Research Center hot charts and alerts, as I always do. All swing trades go into the hot charts and alerts as they happen, literally time-stamped. And again, for those of you that are interested, we are going to have text message alerts for updates that are made to the Research Center starting in mid-March as well, which is going to be fantastic. So be ready for that, and we'll continue to keep you posted on any new happenings in the Research Center. But in other words, you have to join that because the alerts literally, I can't even tell you the amount of money that people have made off the alerts so far, and we don't even have the text message alerts yet. These will be coming in a couple weeks. All right, so join up. We want to see you in there. Start learning, start educating, and start making some money like the rest of us are in 2010. 2010 has been pretty much the most profitable year of trading so far in such a short amount of time that I've seen in years, folks. I mean, it's just that good in a swing trading environment because of the volatility, and in a day trading environment, it simply is amazing. Now, let's look at here. If you fall on the spiders, you're looking for good support here at 110.35. If you get through that, you're going to have great support really with the 109.50 to 109.75 area down here, all the way down to this low pivot from yesterday. All right. Taking a look at a couple charts, guys. One chart of interest was Lennar, which is kind of a home builder type group here. Look at the sell-off on the home sales, and look at the reversal it's had. It's actually a very impressive reversal on that Lennar. You're actually making an in-spirit of bull flag pattern with a cross of the 20 over the 50 coming shortly. That is a nice little pattern there. Toll Brothers, same general move, although not as sharp to the upside as Lennar, but TOL is definitely showing some signs of strength as well, considering the horrible move it took off of the new home sales data that we saw out. And by the way, folks, the fact that the new home sales are that poor, all that means is that inventories are going to continue to stay at these maximum levels and possibly even get bigger as foreclosures continue. Therefore, it will not allow the Federal Reserve to raise rates, and it should continue to put pressure on the dollar. And again, I've been bearish on the dollar in the Research Center to all our premium subscribers, nailing it today, and I continue to be that way for the foreseeable future here because of a lot of factors like this. Bernanke, they want to make sure this market does not really die. Now, eventually it will die and get crushed, but they're going to try to hold hold it up as long as possible. They have to keep interest rates low to do that, keep the dollar as weak as possible. That's the policy that they're going to have. That's the policy that they have had. All right, Goldman Sachs today having a nice day, up $2. It has come in off the highs, but a nice day nonetheless. Apple Computer also a very nice day, up $4, negating pretty much everything it gained, you lost yesterday. And one thing I just want to show you here on Apple, folks, take a look at this. You want to know where you should have shorted Apple? Look at this. Pivot high, pivot high. There's your shorting opportunity. All right, for those of you in the chat room or for those of you that are involved in the Money Stocks methodology, you would know to find that level and be able to utilize it. And again, everything I go over here on an intraday basis, we translate over on the nightly videos in the Research Center to swing trades, to the daily chart, to the weekly chart, to the monthly chart, so you can get in all the positions that you're looking for. All right, folks, have a wonderful day. We'll talk to you soon. Take care.